This voice is taken from an article with the title, "How does the carry trade strategy differ in currency pairs with low versus high interest rates?" which has been published on TRADERTALKSNET. The carry trade strategy is a popular investment strategy used by investors to capitalize on the yield differentials between two currencies. This strategy involves borrowing a currency with a low interest rate, such as the Japanese yen, and investing in a currency with a higher interest rate, such as the Australian dollar. The carry trade strategy can be applied to currency pairs with low or high interest rates, and the difference lies in the amount of return that can be generated from the strategy. When the carry trade strategy is applied to currency pairs with low interest rates, the returns generated are usually small. This is due to the fact that the difference between the two currencies' interest rates is not as large. For example, in the case of the Japanese yen, the borrowing rate is 0.1%, and the investing rate is 0.5%, resulting in a difference of 0.4%. This difference can yield a return of 0.4% for the investor. On the other hand, when the carry trade strategy is applied to currency Y pairs with high interest rates, the returns generated are usually much higher. This is because the difference between the two currencies' interest rates is much larger. For example, in the case of the Australian dollar, the borrowing rate is 0.5% and the investing rate is 4.5%, resulting in a difference of 4%. This difference can yield a return of 4% for the investor. Thus, the carry trade strategy can yield higher returns when applied to currency pairs with higher interest rates. However, it is important to note that the higher returns come with greater risk. This is because the currency pair with the higher interest rate can become volatile and devalue, resulting in losses for the investor. In conclusion, the carry trade strategy differs in currency pairs with low and high interest rates in terms of the returns that can be generated. While the carry trade strategy can yield higher returns when applied to currency pairs with higher interest rates, it is important to note that higher returns come with greater risk.